Hello, my dear friends. This is CH Chinmay Hegde, your learning partner for understanding financial management. Welcome to day number 8 on Let's Learn SFM practically. Disclaimer first. This video is for education purpose only. Do your own analysis before investing. 4 segments that we are covering every day. First, quote of the day. Amateurs open the market, professionals close the market. Let me explain more in the subsequent portion of the session when I talk about yesterday's session. So, what is the terms of the day to understand? Quite a few people have asked me for this, that is moving averages or divergence. This discussion or whatever interpretation we do here is mainly applicable for short-term trading only, not for daily trading, not for long-term trading, medium-term trading. We can also say like a swing trading. So what is this moving averages? You know, if you look at the stock price, it move very things like that, right? It move very like it is very volatile. It changes very fast. If you want to smoothen the graph, we use the concept of moving averages. Moving averages are very simple concepts. For example, we have 20 DMA. That is 20 daily moving averages. So today we take the last 20 days average. Tomorrow I take the last 20 days average. So I keep going further. I add one day, I subtract one day. So what happens now when you plot this on the graph for a particular day, I'm not reflecting today price, I'm reflecting the price for last 20 days. Now, every day the price can change, but every day the average will not change drastically because it takes last 20 days data. So if the graph look like this, whereas the average looks very smooth, it does not change drastically. It also helps us to identify the trends. So we have various types of moving averages. The simplest one, simple moving average. What is simple moving average? Take past few days data. Most popular one, if you are looking at a very short term trading, we take 20 days DMA, that is 20 days daily moving average. If you're looking at a little bit long term trend, then we will take like a 200 days to moving averages. Or some people also take for medium terms like 50-day daily moving average. So what really happens? What is the importance of these averages? Let me try to explain. And also we have one more concept called as exponential moving average, EMA. Calculation part I will not go in detail. Let me tell you the concept. So when I focus more on the previous price rather than on the oldest price. See, I'm not taking a simple average. I would like to take a weighted average. My previous day price is more important than my earlier day prices. Because previous is very latest, relevant, that has to be given higher importance, higher weightage. So when you give higher weightage to the latest price, that becomes exponential moving average, basically based on ratio. It's also average based on last few day prices. Okay, let me tell you the divergence. How do you understand? So the stock price moves like this. If the average somewhere comes like this and cuts this, that is when the average line intersects the regular graph from the top, that means the average is coming down and the market is likely to fall. Similarly, if the average line cuts from the bottom, that is also a divergence, moving average divergence. We also say like MACD, moving average convergence, moving average divergence. So when the average line cuts the regular graph from the bottom, it is likely the price is going up. If the graph, the average moving average cuts from the top, that means average is coming down, trend is bottom, and the moment it is intersecting the line, it is trying to go further down. So what is the main concept behind moving averages? Very, very simple. Some days you may be happy, some days you may be sad, but most of the days you are not happy, not sad. That's how your human emotions mostly will be. Same thing we apply to the concept of stock price. Sometimes it might go up, sometimes it might come down. We don't want to have too much of movements. We want to look at on an average is the price is going up, or on an average is the price is coming down. That is called as moving averages, simple moving average, exponential moving average, 20-day, 50-day, 200-day. And divergence means when you intersect the moving averages with normal graph, the intersection point will tell us whether the stock is likely to go up or stock price is likely to come down. These are all chances, probabilities. Nothing will ensure the future. Nobody knows the market, nobody knows the future. Okay, actual graph, I will show it to you. Okay, I'll just show it to you quickly, the actual graph. Let's quickly go through. I'll just go to the PPT. I'll go to the internet. So popular website available free is TradingView. Everybody can use this. So I'll go to Nifty 50 only. To show you a simplest thing. You can try, you should analyze more. These are just introduction points. I'll say full featured chart. Let me just clear all drawings. Okay. So let's say I select last 1 year. The market is up. See, you see small changes. So much fluctuations. Now what I'll do, I will add daily average or moving average. So I'll type moving average. Hope you're able to see this PPT. Okay. So moving average. You see moving average exponential is also there. I'll set moving average. Okay. So moving average. So it has basically selected 9 automatically. Let me change slightly. I'll select, let's say, 50-day moving average. Medium term, 50 days. Average. So you look at the graph. Hope you can see this line. You see, it is always at the bottom. The line is above and the line is increasing. You see, the prices are so much fluctuating, down, up, but the average is consistently increasing. That clearly tells that the market is on an uptrend. And it intersects and then again start going up. So that looks like a support level also, you can say. You see, again it comes down, intersects, goes up. But the moment it intersects, it fell down to an extent, then again went up. From the moment it starts, see, I told you, when the line intersects from the top, the line is likely to go down. Can you see? The moment line intersects from the top, it's go down. From the bottom, it intersecting has gone up. Now it's again coming down. It is likely to touch this. Simple concept, may not happen every time, but very simple interpretation. When the moving average comes from the bottom, intersects the line, the market is likely to go up. When the moving average comes from the top and intersects, from the top it intersects, the price is likely to come down. There can be false breakout also, false intersections also, like if it cuts but it does not move down faster or move up faster. They are called as false divergence. So you should be very careful in your interpretations. So when you do more charts, more analysis, you will be able to have a better probability. Okay. So this regarding terms to learn for the day. Let's come back to PPT. Okay. So what yesterday we discussing? Yesterday market was up in the morning, but we discussed it will go down towards the end, and we have discussed it might reach 14,950, but it has even crossed around 14,920, I think. So our prediction of the direction was correct. 950 we told, it's around 920, so 20-30 point difference, but still we are right in our prediction. And yesterday was the expiry day, so Market was down towards the end. That's what I told you. Quote of the day: amateur starts the market. So don't give too much of importance to the starting sessions. Always give more respect to the close, because after 12:30 Indian time, 1:30 Indian time, the European market opens, other Asian market opens, and we react to their movements also. So the movement which have taken place towards the end of the market is very, very essential rather than the opening of the markets. That's why we say professionals close the market. So close price are more important. So what happened yesterday? Markets were down towards the end of the day, mainly due to expiry issues and also international cues. China putting restriction on steels, so stock price were down yesterday. Private banks dragged the market, so ICICI Bank, Kotak Mahindra Bank, HDFC Bank were the main reason why Nifty was down yesterday. SBI results today, so private banks were down yesterday, but not public banks. SBI was not down yesterday. Here is the important learning for you, my dear friends. Banks were down, SBI did not go down. Today, SBI results are expected. What is my take? SBI going to be seeing some profit booking today. It has up quite a few much in the past few days, but not gone down much in the expectation of good results. So what really happens, even if good results comes, stock price will still go down because that was already factored in earlier days. When will stock price go up? Only if they give good result beyond expectations, which in my opinion very unlikely. So some profit booking may come. So it might look like stock SBI will go up initially and subsequently might go down. That is my particular assessment, my particular individual assessment. SBI will go down. I have every right to be wrong. And FI bought very little yesterday. They were continuous sellers for last few days and very little they have bought. DIS, domestic institutions, have sold. Okay, let's see what is today's assessment is going to be. Local cues are still negative. Mixed, I would say, but still lockdowns are happening, so still negative. And yesterday market was down drastically towards the end. Global cues have turned positive now. Global cues turns are positive because yesterday Nasdaq is in good rally. They've increased like anything, crazy increases. Dow Jones also was up because previous 3 days US market was down and the next 3 days it was up. Chart analysis. Okay, let us look at Nifty 50. Let's see what does Nifty 50 will tell us. Chart anyway is already open. So let me look at last 5 days chart. How does it look like? Okay, so it looks like it is on a downwards trend. In last Monday, this Monday, Tuesday, market went up crazily, but after that it is on a consolidation mode. So it is short term, it looks negative. Let me take 1 month chart. 1 month chart, it has gone up, down, gone up, down, gone up, down. So you see it is at this resistance level. You understand? This was the resistance level. It was broken. It went up. Now it is coming down. So the previous resistance becomes current support. So now it is at current support. So what is our interpretation? And current support is broken. So it can still go down a little bit further down. So what is my take? So now let's see what is Nifty 50 looks like. Has it opened high, opened low? It opened negative. No, it opened positive. It opened positive. 15,980. It opened positive today. 80 points up. But my expectation, it can go up little bit, but not too much. So my expectation, 15,000 was a very important support. It was broken. Sentiment is still negative, in my opinion. I know some people are telling it is turning positive, but my opinion for the short term view is still negative. So it is likely to be around 14,900 or 14,950. I still maintain my view. So chart analysis still negative. So two negatives. My take is also negative. I know market is telling positive, but my opinion is for the day at least is still negative. So my assessment, it is around 14,950. 14,950. Maximum it can go to 15,000, but 14,950 is my assessment. Every time may not be true. but try to develop that habit. This I'm trying to tell you from very basic points. Lot more analysis to be done before you get more accurate answers. But start somewhere, then you can move upwards. Oh, as I tell, it crossed 15,000. So after, I think after a few days of negative things, market might go up. Anyway, that is what people are telling. I can go wrong. My view for today is still negative. It will still go down. Okay. So I hope you enjoyed today's session. Hope to see you with more points tomorrow. Till then, take care. See you. Bye bye.